Welcome, family. My name is Troy Simbasini, and I'm super excited to bring you this market update today for Mackay. So, good old Mackay, beautiful Mackay. We'll take a deep dive into this market and have a look at exactly what's going on in January 2024. We're going to have a look at some different data trends from the last 4 months, from the last 12 months, and from the last sort of 3 to 4 years as well. So, you're going to try and get an understanding of what's happening in this marketplace right now. And I suppose this update is designed for property investors, for home buyers that may be looking at entering into this market in the near future. So I think something like this is going to give you tremendous insight about this marketplace and whether or not you should buy, wait, or forget about it altogether. All right, guys, I'm keen to dive in. Let's go. Okay, before I do, I just want to give my business a little bit of a plug here. So I'm the owner and head of research of Capricorn Life Buyers Agency. It's one of our subsidiary brands under the Life umbrella, and we service the Rockhampton, Mackay, and Bundaberg area. And look, guys, we help a lot of people navigate this marketplace, particularly struggling home buyers. We work with a lot of geographically challenged buyers, particularly investors or intra-regional buyers and investors as well. But look, guys, if you are someone, I suppose, that's looking at potentially buying in this marketplace and you don't know too much about some of the better areas to buy, and you feel as though you might need some help navigating it, or you're a bit reluctant to buy altogether because you're a bit hesitant whether or not it's a good or a bad area, we might be able to come in and add a bit of value from that respect. So feel free to reach out to us, guys, if you feel as though you need a hand. Visit us on our socials. Here's our website. Give us a call on this number. Let's connect for initial chat, see if we might be able to add value, and then we can step out things from there. Okay, so those who follow my content know that when I break down the marketplace, I'm looking at it from a data perspective. So we've got our own sort of methodology and framework we use to break down what's happening in the marketplace, and it's designed to try and give the different types of buyers, whether you're a home buyer or investor or someone just that's curious about the marketplace and understanding of what's going on there, so you can potentially make an informed decision before we buy. And the data is a great thing too, guys, because it allows us to really break down and understand different points in time, different trends over the last few months and over the last few years, rather than me just talking about how Mackay is going from an anecdotal perspective. Let's actually use the data and really lean on this data to paint a picture of the marketplace. But this is the framework here that we follow. We start off by looking at what's happening in terms of the median house price and that trend. Is it going up? Is it going backwards? Is it plateauing? We're going to be looking at the supply side of the market in terms of listing volumes. Are they going up? Are they going down? What's happening in that respect? We're going to have a look at the inventory rates, as well as inventory rates getting bigger. Are they starting to contract? It's going to give us an idea of what's happening on the supply side of the market, looking at those two key metrics. We're going to jump over and look at the demand side of the market, and a good one we like to use is days on market and the absorption rate. So we're going to get an idea on how fast properties are selling for across Mackay, and the overall absorption rate across the region as well, in regards to how many properties have went on over the last few months and how many of those properties have sold. And that absorption rate is basically the percentage of that, and obviously the higher the absorption rate, the higher the market. So I'm super excited to see that, and I think stick around for that, because you're going to be really surprised to see Mackay's absorption rate. It is insane, that absorption rate. And we're going to have a look at the rental side of the marketplace in terms of vacancy rates and the vacancy rate trends. We're going to have a look at the median rent change and what that's looked like over the last 12-month period, and what's that likely to look like going forward. We're going to pick our head over and have a look at the supply side of the market, because obviously supply or future supply can have a big impact on supply levels. It can have a big impact on vacancy rates. It can have a big impact on the median price of the marketplace as well. So we're going to have a look at what that pipeline might look like as well. And then we're going to finish off with a breakdown of the different trends that have basically come out of the presentation here, and summarize everything. So if you are an investor or home buyer, I think there's a lot of value there, looking at the supply side, looking at the demand side, looking at the rental side of the market, looking at the future pipeline, to give you a really crystal clear idea of the marketplace. All right, guys, I'm keen to dive in. Let's get this going. Okay, let's have a look at our first data point, which is the median house price of Mackay. So I've summarized it here. The Mackay typical house price currently sits at $489,000 in January 2024. Over the last 4 months, it's grown by 1.8%, or $9,000. and it's actually up 7% year on year from 457,000 in January 2023. So $9,000 over the last 4 months. It's increased by the median house price, and over a 12-month period, what does that look like? What, close to $20,000 or even $30,000? Is that yeah, $30,000 I think over the last 12 months. So it is a market, guys, that has grown significantly over a 12-month period, and then it really hasn't lost any steam over the last 4 months of last year. So that's sort of a breakdown of what that typical house price looks like for Mackay. And I suppose a couple of key points I want to make in relation to this median house price is that, you know, this market is going up despite the headwinds that we've had of late when it came to interest rate rises. That's obviously, you know, put a bit of a dampening on, you know, price movements in other parts of the country, but here it hasn't really affected Mackay by looking at this data. And obviously that went on to affect sentiment as well in the marketplace. So that change of sentiment around the market tanking, crashing, you know, with really slowed down a lot of property markets, but the Mackay seems to be surging along nicely. The next thing point I wanted to make was that if you actually benchmark this median house price against the other big regional hubs across regional Queensland, it actually sits 5th on the list. So it's behind Bundaberg, it's behind Hervey Bay, it's behind, what else is it behind? Toowoomba, it's behind Cairns, and it's, I think, sitting just above Townsville. So it's around 4th or 5th in terms of the most expensive regional hub across Queensland right now. One of the things about Mackay as well that a lot of people don't know, it does have at an aggregate level some of the highest household income across Queensland. Obviously, there is a large portion of the workforce there employed by the mining sector, and they have, you know, higher than average incomes, generally over that $100,000 per annum. So when you start to look at the average household income in Mackay versus this median house price, it's still very affordable relative to household incomes in the area, and there's a lot of wiggle room to keep pushing this up if a lot of those people hang around in this marketplace and buy real estate. And the last point I wanted to make as well is not only is it affordable relative to the people that live there on high incomes, it's actually very affordable relative to you know, other lifestyle destinations across Queensland. Obviously, the Sunshine Coast and the Gold Coast, those are key lifestyle markets. Median house price, you know, circa $1 million or more. When you start to look at other lifestyle markets like Bundaberg, like the Bargara, on the east coast of Bundaberg, the Yapoons, the early beaches, the Palm Cove and Cairns, a lot of the median house prices in those markets are pushing well above $800,000 into $1 million, and they're key lifestyle markets when you still have some really good beachside suburbs in Mackay where you can still get in for around that sub 600,000. So I think, you know, they are very, very affordable relative to these other lifestyle markets because Mackay has some really amazing beaches and some really good lifestyle drivers. So from a lifestyle market perspective, I think it's very affordable relative to those other lifestyle markets. But I want to finish by saying I don't have a crystal ball. No one does in relation to where this median house price is likely to go. All we can really look at is, you know, the demand side of the demand side of the market, the supply side of the market right now to see what might happen in the short term, and then really looking at, you know, the overall sort of macroeconomic drivers and what's likely to keep pushing Mackay, you know, as a regional hub forward, and then that's obviously going to then ripple down into the housing market as well. So if you can look at those micro factors and macro factors, I think that really is going to give us a picture on what's likely to happen in the future in terms of the median house price. But today we're just going to be looking at point in time data. But if you are curious around what might happen in the future and you want to invest in this market, I suggest going away and looking at some of the macro market drivers and really unpacking that. Things like population movement, economic spend, affordability, all of those sort of things I think will really play a role in where this median house price goes in the future. But that's a good summary there, guys, of basically what's happening in Mackay in terms of the median house price. I just wanted to give you a quick sneak peek into some individual suburbs across Mackay and how they've performed over the last 4 months as well in terms of their median house price change. And look, this is only a snapshot of a couple of suburbs. This isn't all the suburbs across Mackay, but it gives you a really good idea on, how things might be moving across individual suburbs. We can see here Ruleview is up 9k in the last 4 months. Mackayshire up 8k. Beaconsfield up 10k. North Mackay up 7k. Slade Point 7. East Mackay 6. Black Beach 6. Glenalla $9,000. So when we start to look at individual suburbs, they're really surging along as well. And the key point I wanted to make by pulling this these individual suburbs up is that if you are someone that's been sitting on the marketplace, the longer you are sitting out, the more it's potentially going to cost you. So if you waited for the last 4 months and decided what to do, you're already down, the best part of 7, 8, 9, 10 grand already. And if you sit out for the next 4 to 3 months, you could be, potentially down a total of, $20,000 plus. So it's going to cost you more to get into that marketplace the longer you wait when you start to look at these individual suburbs. And look, guys, from an investment perspective, my advice here is, just take this information with a grain of salt. Obviously, go in and look at each individual suburb and do your own research, because they're all at different price points. They're all have their own different sort of supply and demand side drivers. They all have different demographic, different stock qualities, different yields, different vacancy rates, different median rents. So go in and obviously do your own research around individual suburbs as well, guys. So yeah, just take this information with a grain of salt. I wouldn't be going and buying, in Slade Point just based on this data. To jump in and do a bit more research. But yeah, guys, that's a bit of a sort of sneak peek into individual suburbs across Mackay. Okay, let's jump in now and have a look at the supply side of the market. And one of the supply side metrics we like to look at is listing volume. So basically, how many properties are coming on the market each month for sale across Mackay, and this is going to give us a really good idea on what the supply side of the market looks like. So we can see here stock levels are currently sitting at 0.2%, which means there were approximately 129 houses currently listed for sale in January 2024, and it's actually a 40% decrease in stock to January 2023. So actually, if we look at this red circle here, we can see here 0.4% stock levels and 129 listings. And if you follow this black line back, the best part of 12 months to where it was, there's a 40% decrease there in the amount of stock currently available supply, and it's probably sitting the lowest it's been now for, I'd say, the best part of 10 months. It was very low towards the back end of 2022, much lower, and it looks to be on track to fall basically to a 3-year low here in Mackay, these stock levels, if these listing volumes continue to go down. But it's an interesting trend there over the last 4 months. We've really seen it fall off a cliff from around above 200 properties per month listings down to really low 100s to around that 120, 130, and if it drops down to that sub 100, we're in a market where the amount of listings available for purchase is very low. Because if you think about it, relative to the size of Mackay, 130, 140,000 people in terms of a regional hub, to only have the best part of 130 properties right now available for purchase, only 2%, is very low. But if it falls even lower than that, under 100, you're down to sort of 1%. That under around 0.1%, that is really, really low numbers. But it's already a really tight market, guys. It's sitting well below 1% in terms of stock levels. So from a supply point of view, this is a really good thing you want to see, particularly if you are investing where supply is starting to get really low. And obviously, if demand supersedes that, you're in a market there where there is an imbalance between supply and demand, and that can have an impact on price movements. Obviously, that creates the pressure to potentially push them up. And it's obviously not good if you're a home buyer. I think it's pretty tough all around. There's not a lot of options for home buyers in the marketplace as well. And look, guys, I'm not going to dive into individual suburbs, but this is the Mackay marketplace at an aggregate level. If you dive in and look at individual suburbs, you'll find that they'll have a variety of different levels of listing volumes as well. Like one suburb might have a higher listing volume than another suburb, so you need to go in and look at individual suburbs as well, because some suburbs have more supply than others, particularly if you want to invest in that market, I'd suggest doing that as well. And look, guys, from a trend point of view, it's, as I said, going to be almost at a 3-year low shortly. And really, the only thing that can really come in and push up these listing volumes is if a lot of people decide to sell. So if there is an economic shock in the area, people need to sell and move on. That's obviously going to push up listing volumes. Or if there needs to be a whole bunch of new supply injected into the marketplace, new properties available for purchase, apartments, units, townhouses, new house and land packages, that injects the market with that additional supply that pushes up the listing volumes per month. So we'll get an idea on what that would look like as well when we look at the supply pipeline a couple of slides later. But look, guys, from a stock level point of view or a listing volume point of view, it's almost at a 3-year low and sitting well under 1% now and sitting currently at 0.2%. Stock levels are very tight here in Mackay. All right, the second supply side metric we like to look at is inventory levels. And for those who are unfamiliar with inventory levels, all that speaks to is how many properties are available for purchase each month across Mackay. So this figure is a lot different to how many properties come online each month in terms of listings. So you have listings, which speaks to the amount of properties that are coming on each month, whereas the inventory levels, you have how many properties are actually available for purchase in that market, and those two figures are always different. So we can see here that inventory levels are sitting at 0.7 weeks, which means that there are approximately 7 to 9 days worth of stock currently sitting on the market. So how we measure inventory levels is basically in the form of months and weeks, and obviously the higher the months means that the more inventory is available on the market, the lower the days, weeks, or months. That means the smaller the inventory pool that's available for purchase. So we can see here that the inventory pool is only really sitting big enough to sit on the market for 7 to 9 days. So that means that the pool of properties in Mackay right now is so small that if the market became redundant tomorrow, it would be cleared out in 7 to 9 days. So this just goes to show that Mackay is an extremely hot market here. Without even looking at the demand side data, we've already established, based on the coiling of this inventory graph and the nature of that 7 to 9 days right now, that it's a market where demand has significantly exceeded supply. So you've started to get a coiling right down to a point now where properties are only really sitting, on the market for 7 to 9 days if the market became redundant. So we have a market here in Mackay where supply is very grim, because we've established basically that the listing volumes, are starting to really go down, and now inventory levels are at a significant low. And if we actually benchmark this compared to, the last 3 years, it's probably the lowest it's been in the last 6 months, and it's catching up to where it's been 12 months ago, and where it's was about 2 years ago in 2021. So Mackay has been a market that's been rather tight from an inventory perspective, over the last few years, and now it's really started to contract even more, where it's pushing down to almost a 3-year low if this trend continues. But that just goes to show, guys, that it is one of those hot and heated markets where demand is very high, and listing volumes isn't enough to sustain that demand. Therefore, we've seen a coiling and a reduction of the inventory pool over time, now down to a point where it's very grim, around 7 to 9 days. So from a supply side, guys, Mackay is very low. Okay, we've had a look at the supply side of the market, the inventory levels and the listing volumes, and we've basically established that both of those two supply side data metrics look very grim. Listing volumes have gone down and the inventory pool has really coiled and contracted over time. So what's causing that is obviously demand. So we're going to have a look at what the demand looks like right now, and days on market is a good demand side metric we like to use to gauge how strong demand looks like in the area. And basically all that speaks to is how long are properties sitting on the market for before they sell. And obviously the higher the day on market means that properties aren't moving as fast, and the lower the days on market means that properties are moving very fast, which suggests that demand is high and things are transacting and turning over very quickly. So we can see here that the Mackay January days on market sit at 45, which is slightly higher than the last 4-month trend. And we are seeing vendor discounting starting to fall, sitting around 1.5%. So this graph is a combination of days on market and vendor discounting, right? So vendor discounting is also another data metric we like to use to also gauge what the demand side of the market looks like. And basically all that speaks to is, if for each property that goes on the market for sale, are they discounting in order to be sold? And if they are discounting at a larger percentage, that means that there isn't a lot of strong demand in the marketplace because people are offering $20,000, $30,000 under the list price in order to purchase it. And obviously, if the vendor discounting percentage is smaller, that means that people are buying in and around list price or paying above list price in order to get the property, which suggests that the market is a lot more hotter. So we can see here, yeah, that vendor discounting sits around 1.5% also. But let's have a look at days on market first. So currently sitting at 45, and it's actually, as I said in the summary, it's bucked the trend over the last 4 months. And similar, I did a market update in Townsville, and when I looked at Townsville, it was a similar jump actually, where it sort of bucked the trend over the last 4 months. And the reason why I think this is the case is that, because these are January figures, right? A lot of people that purchased around the December period would have actually settled in January, so they would have had a generally longer settlement time frame. So a lot of the houses were purchased in December would have settled in January or towards the end of January, so longer settlement periods rather than the average of 30 days. They would have had to maybe settle in 45 days because of the Christmas closure, where banks have closed, offices have closed, so a lot of people adjusted their settlement dates, put under contract in December and settled around sort of mid to late January. So that's why I believe there's been a spike in the days on market up to 45. So I wouldn't read too much into that. If it starts to buck that trend where days on market is getting higher in February, March, April, then that's where we kind of know maybe demand is starting to cool off. But right now I'm not going to read too much into it, because if you actually go back and look at the last 4 to 6 months, it's really sat around that 30-35 days on market, which basically suggests that most properties around the Mackay region are going under contract within the first 7 days of going on the market. So when things are sitting at around 30 to 35 days, it's a very hot and heated market where competition is very high and things are transacting and turning over fast. So from a days on market point of view, I suppose my tip there to home buyers and investors is that if you aren't watching the market closely and don't have your eyes on opportunities very fast when they become available, and you aren't moving and acting on those opportunities, you could be missing out here because things are going under contract very, very fast. And if you can potentially get your hands on some pre-market or off-market deals, I'd suggest jumping on those to try and get ahead of the pack, because things are going under contract very fast in this market, guys. So from a days on market point of view, very healthy levels. As I said, I won't read too much into that 45 days there, but it's something to keep an eye on over the next 3 to 4 months. If that starts to sit around that 45 days or get slightly higher, then we know maybe demand started to cool off. But I'm not reading too much into that. All right, let's have a look at the vendor discounting rate. So this is very interesting when it comes to vendor discounting. It's basically at a 3-year low, sitting at 1.5%. So we've had a marketplace basically over the last 3 years where most things discounted in order to be sold in the marketplace. So something would go on the marketplace in Vacacia or Blacks Beach or Ruleview for $500,000 and sell for $485,000. So $15,000 discount, a $10,000 discount. People were offering below list price in order to get that purchase over the line. Whereas it's not really the case now anymore, where things are only discounting at a really small percentage in order to move. But this is also at an aggregate level. So that means that there are many properties that are in Mackay that are selling well and truly over list price in order to be sold. So $500,000 properties are probably selling at $530,000 right now, because this is the average. And when you start to see that average around that 1.5, 1% up to around that 2%, that's when you know things are selling above or around list price in Mackay. So I suppose the key lesson there is, if you are, key tip for someone that's looking to buy in this market is, lowballing potentially won't work here right now because things are selling around list price or over. So offering $10,000, $20,000, $30,000 under list price, you might be laughed out the door in a marketplace like this where things are selling very fast, demand is very high. So vendor discounting, and days on market from a demand side point of view are looking very good here, guys, in Mackay. I just wanted to show you a peek behind the curtains again of some individual suburbs and how fast they are also selling, because there is a difference between the aggregate level data across Mackay and individual suburbs, because obviously once you start to drill down deeper individual suburbs, you find that demand might even increase or decrease. So the amount of days on market, or their days on market number, will be different to the aggregate of Mackay. So we can see here that Ruleview 27, Acacia 25, Beaconsfield 25, North Mackay 41, Slade Point 26, East Mackay 44, Blackspeed's 35, Glenella 28. So you can see here there are markets within Mackay, obviously, where it's well below the average of 45/35 days, where things are going under contract very, very fast and things are turning over fast. So you can get an idea basically now just by looking at a few suburbs across Mackay where there is high demand and where there is sort of less demand across the marketplace. So yeah, guys, make sure you jump in and do your individual research about different suburbs to establish what the demand side looks like, but gives you an idea on how to navigate each individual market when you start to look at their days on market number. Okay, the last demand side metric we like to look at is the absorption rate. So the absorption rate, all that speaks to is these are the amount of listings that have come on during a specific time frame and what percentage of those listings actually went on to be sold. And obviously the higher the absorption rate just goes to show that the higher the demand, because those listings have been chewed up and swallowed by the market, the lower the absorption rate means that people aren't really buying a lot of the stock that's coming on the market at a high enough rate. Well, we can see here that Mackay is experiencing an overall absorption rate that is extremely high, sitting at 98% from October 2023 to January 2024. So over this specific time frame, the absorption rate for that period is sitting at 98%. And this is actually up from 90% during the same time period the financial year before. So so it's up 8% year on year, which is insane, right? To know that demand has increased so much over that period from an already high absorption rate of 90% now at 98%. And I did a market update on Bundaberg recently, on Cairns, Townsville, Yeppoon, Rockhampton, and none of them have these absorption rates this high. So Mackay is the highest has the highest absorption rate across the regional Queensland property market right now, sitting at 98%, which is insane, right? And if we actually break down what these numbers look like over that time period, we can see here that there were 672 listings and there were a total of 665 sales. So only the best part of 20 or so properties that didn't get sold over this time period, which is insane, right? To know that majority of the properties are getting eaten up, chewed and swallowed by the marketplace. And when you have an absorption rate so high, that shows that demand is very, very strong, because whatever's going on the marketplace, people are buying, regardless of what's going on the marketplace: units, apartments, townhouses, lower price point, high price point, luxury. Everything's being sold. The best part of 98% of the stock is being purchased across Mackay, with only a small bit of rubbish there that's left. The best part of only 20 properties that aren't being consumed by the marketplace. So from a demand point of view, we've had days on market very low, we've had vendor discounting very low, and now we've had this absorption rate very, very high, and it's ticking all those three boxes for me, particularly if you want to invest in this market. That just goes to show that demand is very, very high, guys. Okay, I just want to quickly have a look at the rental side of the market. It's going to give you some good insight, particularly if you are an investor, to get an idea on what the vacancy rates look like, the associated trends. and could give you some confidence around whether or not you should invest in this market or not based on what the vacancy rates look like. So from a vacancy rates point of view, we can see that they continue their downward trend over the last 12 months, now sitting at 0.7%, which is well below 1%, with only 48 vacancies currently available for rent. So 0.7 or 48 vacancies, and we can see from this graph here, it's a marketplace that is a very tight rental market, guys, sitting well below 1%, and it's actually sat well below 1% for almost around 7 to 8 months now, if we follow this line back a few months. And from a year-on-year point of view, it's probably dropped from around that 1.5% vacancy rate now down to 0.7. So it's a marketplace that's only got tighter and tighter in terms of the amount of properties currently available for rent. And what that actually looks like in terms of numbers, so about 12 months ago, there were on average around 100 properties available for purchase, and now that's basically reduced down to 50. So the best part of a 50% reduction in the overall supply levels of rental properties available in Mackay. And that's crazy to assume, right, knowing the fact that Mackay has a population base of around 140,000 people to only have the best part of 40 to 50 properties available for rent at any given time. It's an extremely tight rental market and very difficult one to crack if you are looking to rent in this market. And I think what this will translate to, and we'll have a look at it in a sec, is I suppose really juicy rental yields as well, because a lot of people, given these low vacancy rates, a lot of the property managers will be putting properties on the market at a very high premium. And as I said at the start of the presentation, a lot of people have really high incomes, and a lot of people are coming into this market to work in the mining sector and the construction, where they have higher than average incomes. That can really start to also push up the median rent in the marketplace, and has a lot of wiggle room to grow, because people can still afford to pay over $550, pay over $600 per week to rent properties in this market. But yeah, guys, from a vacancy rate point of view, it's ticking the boxes for me from an investment point of view. Very tight marketplace. In fact, when we purchased one there for one of our clients about 3 weeks ago, it got 12 applications. 3 weeks ago, 12 applications. So, every property will be different, I suppose, with the amount of applications you're going to get, but there is a lot of rental depth here, and based on these vacancy rate figures and the amount of properties available for rent at any given time, I think you're going to get a similar amount per property in terms of rental applications, that's for sure. Okay, median rental data, get some insight about that. Let's have a look. Median rent for Mackay currently sits at $479 per week. And it's actually up 7.8% year on year from $444 per week. So we've had a huge increase there, guys, over the last 12 months in terms of median rents in Mackay. So it is a growing rental market where I suppose yields are getting juicier and juicier if you are looking to invest in this marketplace. So 7.8% increase, guys. That is huge, and that just goes to show that there's significant rental pressure, because we've obviously saw that those vacancy rates are extremely low. So property managers are putting properties on the marketplace at a premium each time, slowly pushing up this median rent over time. But if we actually looked at it, 479. As I said previously, we purchased a property only a couple of weeks ago in Mackay, and that's actually renting for $620 per week. So my advice is, if you dive deep into individual suburbs, you'll actually find that a lot of suburbs are outperforming this Mackay median a lot more, and then there are obviously other suburbs that are on par or slightly below it as well. So if you are looking to invest, dive in and look at individual suburbs, because they all have a variety of different median rents. But look, guys, that is as what I said before, still a very affordable rental market. Also, when you start to benchmark it compared to household incomes, that's probably still sitting well below 30% of household incomes as a percentage, right? That $479 per week. So that would have the ability to easily push up into that $550, $600 in the coming years. And as the supply side of the market in terms of rents, those vacancy rate figures remain really low and remain that way, I think this is going to continue to push up these median rents. And what might come in and skew it or throw it all off or slow it down is obviously if there is a slowdown of work and population movements where a lot of people stop coming into the area, so there isn't really a huge demand for rental properties available in that marketplace, or if the marketplace gets injected with a whole bunch of new supply apartments, townhouses, house and land packages, where that comes in and injects the market with that supply, and then the demand side of the market is met with that equal level of supply, then things start to slow down from a median rent point of view. But look, guys, juicy rental yields, I think all round, really affordable market, plenty of wiggle room to grow. Things are looking good from a median rent point of view in Mackay. Now, the last bit of data we're going to look at today is the billing approval data, and that speaks to what the new supply pipeline might look like. So obviously billing approvals, there is a correlation between billing approvals and new supply. Well, developers, builders, they go out and they find land, they construct property, they have to get billing approvals, so that billing approval then correlates and translates into new supply. And obviously, the higher those billing approval numbers, we know that the market then could potentially have more new supply. The lower the billing approval numbers means that there is a lower velocity of future supply. So we can see here that billing approval data year on year is actually down by 46%. So the financial year of 2021 to 2022, we can see here that there were 446 building approvals. And we can see here that the financial year, the year after, 2022 to 2023, is 305 building approvals. So a significant decrease there for sure of around that 46%. So I don't know what's causing that. Obviously, we're in a construction crisis. It is difficult to get materials into the country with the ongoing war in Ukraine. We've had a number of builders go bankrupt, national builders, local builders, so that creates a little bit of a distaste and change in sentiment from first home buyers and people that want to construct as well. I think there's been a big move towards buying established property now over building new dwellings because of those high build costs, because of the fear of builders going bankrupt, because of the long wait times now it takes to build property. So they all play their role, I suppose, in the amount of building approvals that Mackay has in the pipeline. But if you just look at these figures alone and just take them on face value, on a year-on-year basis, to be down by 46%, that just goes to show then that the supply pipeline for Mackay, given that there has been a significant decrease, might actually be quite shallow. So there might not be a whole bunch of new supply that can come onto the market to even out the demand and supply side, because we've basically established that demand is way higher than supply right now in the marketplace across Mackay. So we need a lot of that new supply to come into the market to create more of a balance again. Otherwise, we're going to continue to see median rents go up. We're going to continue to see median house prices go up if the market isn't injected with a whole bunch of new supply. And what we're learning here now is that it might not be a market where there is a whole bunch of new supply, because there were several years when Mackay did have an overabundance of supply. There were a lot of new house and land packages available at Mackaysia, Black Speech, Rural View, Andergrove, Beaconsfield, right? There was an oversupply during the boom there, where a lot of developers and builders came in and they smashed out rental stock, and that created an oversupply. But now we're in a marketplace where there doesn't appear to be a lot of that now in the pipeline. So Mackay is entering into a period, I think, potentially over the next few years, if these building approvals remain low, where supply or new supply is pretty grim. So that just means that I think median rents will continue to push up, and the median house price will continue to push up if all things basically remain the same here, guys. Woo! All right, family, you've made it to the end. Congratulations. All right, let's wrap this up for you, so you can take this information in your back pocket and use it to go out and navigate the Mackay property market. All right, starting off with the median house price, guys, we basically established that over the last 4 months it's rising, and over the last 12 months it's rising. So the best part of a 7% increase and 1.8% increase over the last 4 months. And then we deep dived into individual suburbs. We found that over the last 4 months, many of them are increasing, from the range of around $7,000 to $10,000 over a 4-month period, and then if you extrapolate that over a 12-month period, you're looking more or less around that 10 to 17 to $20,000 across individual sellers in Mackay. So again, median house prices is rising. Good for investors, maybe not so good if you're someone that's sitting on the sideline and waiting for price to go down. It doesn't appear to be a market where prices are going to go down, or the market is going to correct itself. It's going up each quarter, and it's going up over a 12-month period at a really high rate. So get in while you can, guys, and make some money, particularly if you're an investor. The sooner you can get in, I think the more money you're going to make in the short term. We look at the supply side of the market, and we've seen those listing volumes decrease over time, now down to a 3-year low. We've seen the inventory pool of properties contract and coil right down to where it's almost at a 3-year low. Also, from some applied point of view, we basically established that it's not enough to keep up with the demand in the marketplace, hence a decrease in stock overall. And yeah, that's looking pretty grim as well, even when we've looked at the new supply pipeline data, because we've established that there's a 46% downturn, or 46% decrease on year building approvals as well. So we may not see a whole bunch of actually new supply come onto the marketplace and adjust to the supply levels also. So that's very interesting, guys. From a supply point of view, supply is very low, and to accompany that, we've looked at the demand side data, and we've established that demand is bloody very, very high as well. Low days on market, low vendor discounting, very high absorption rate, tick, 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 tick. Supply, demand, a massive imbalance there, so that only puts upward pressure on house prices. So that's basically what we've established in Mackay. Vacancy rates under 1%, extremely, extremely low, right? So from a vacancy rate point of view, one of the most toughest and hottest rental markets in regional Queensland right now, bar Bundaberg, I think. And from a median rent point of view, up 7%, $44, or I think whatever it was, which is a huge increase, right? So really juicy rental yields there as well, and I think plenty of wiggle room to push up those median rents, I think, over time as well. So those are my key takeaways, guys. Prices are still rising, supply is low, demand is high, future supply pipeline looks grim, vacancy rates low, median rents trends are good. And overall, it's a seller's market, so it's really tough pickings if you are a buyer. But go out, guys, give it your best, and I'm sure you will come out on top. Otherwise, give me a call. I might be able to help you navigate the marketplace, guys. But yeah, all the best and good luck with it, Jay. Okay, guys, in finishing, here's another plug of the business. If you are someone that you feel as though might need a hand navigating the marketplace, interstate investor, you're a bit reluctant to pull the trigger, you still don't really want to go about buying in the marketplace yourself, you want to lean on some expert advice, feel free to reach out to us, visit us on these socials. This is our number to call. Jump on the website, have a bit of a look. I'm happy to send you some case studies of properties we purchased in Mackay as well, to give you some idea on what we buy and the results we've gotten for our clients. But yep, guys, happy to help. Give us a call, look us up, see if we might be able to give you a hand, eh? Thank you and all the best.